Happy Trend Trading Thursday to you, where we ask the question each week, what trend are you riding? My name is James Boyd, and the chat is Connie Hill. We welcome Connie and all of you here today. Now, quick reminder that myself, Connie, and all of us instructors, we do post educational content on X. Connie can actually put her handle there in the chat. That way you can just click on it and follow her as well. Now, I see a couple of you mentioning something about the redheads. I'm assuming you're talking about Connie and I. Okay. All right, a little fun there. Foley, hello, first timer to the webcast. Everyone, let's welcome Foley. Now, just real quick as we get started, this class is really focused on stock investing. If you said, "Hey, I'd like to learn more about ETFs," that will be tomorrow morning at 9:30 a.m. Eastern. That is a live only session. So join us with Kevin and I tomorrow. Now, second, remember that when we talk about stocks, we will also occasionally bring up options, okay? And remember that options are not all the same. They carry a high level of risk and are not suitable for all investors. When we talk about the examples, I'll mention things in terms of a general informational purpose. Do not consider these individualized recommendations. You get to decide what you would consider for yourself, okay? Now, when we do our examples, we'll do those on the Paper Money software application, the Thinkorswim platform. Also, when we talk about investing, without risk, there's no reward. So we need some price volatility typically to do trades, to get trend movement, premium, and so on. We need, to some extent, price fluctuation. Now, also remember when we talk about those examples, we'll hop right into, let's say, just real quick, and we got some questions lined up, so I want to kind of get there as soon as possible. But if we look at I was looking at this, okay? If you look at the S&P, tell me how you read this chart. Now, this was the old like symmetrical triangle slash pennant that we had. And then we actually had where all of a sudden we thought we were done with Iran, if you're living in the US. And then all of a sudden it's like, no, okay, not going back to that, but maybe kind of. And it caused some price fluctuation on the market to some extent. Now, I'm not sure, I don't think we could say that was the whole thing. You saw the semiconductors work down a little bit. Well, some fell quite a bit, but they went up a lot. And you're going to see from the high to low, it was about 1.7% on the index of the S&P 500. Now, that doesn't necessarily mean that that's what your stocks did. Your stocks could have been more volatile than that. You could have been all in tech stocks and it felt way worse than that. But if we're talking about the S&P 500, not much of a movement there, okay? Now, if we kind of just looked at the S&P 500, why do we look at this? Because we're talking about broad market here. You got to remember this is top-heavy technology, though. And by the way, when you look at technology, you need to look at what is in technology because it is amazing. The technology sector is now like the semiconductor sector or industry group, literally. Now, if you take a look at this, you're going to see that we kind of had a midsection bounce. We did not come down to the bottom of that diagonal line. And what you're now going to notice is trying to get a little bit of a bounce, okay? Now, if you pull up the SPX EW, you're going to see that we've been watching that. And again, seeing this equal weighted S&P 500, where all 11 sectors, if you include real estate, generally they've been moving to the upside, okay? Now, again, everyone would like brand new highs. I love the highs every day. I'm sure you would too, but that's not how a trend works, okay? And so we had a brand new high yesterday, make a high, then we actually pull back. Today we're trying to push back to the upside. But overall, when we actually take a look at that general trend to the upside, okay? Now, I think probably the one thing that we need to make mention of here today is the semiconductors, after getting pressed to the downside, the first time we've been above the 10 and the 20 period moving average, really in about 2 weeks or so, okay? Now, many of these stocks, Micron, SanDisk, among others, they finally got above that trend moving average, like a 20-day moving average. That's better, okay? Now, that doesn't mean you're exposed to that area, but seeing these actually go back up, if you had other positions, that might be impactful, okay? Now, overall, if we kind of go back to, well, what about the volatility in the marketplace? The other day we saw the volatility go up, and if we're bears, we just have to feel deflated, okay? Dadgummit, the VIX actually goes up. You're thinking, I'm going to call the top on the market. And if there are bears out there, they're teddy bears. They're not really following through on that bearish comments online, trying to help their position. But overall, it just there's no follow through. And here's the VIX back down below 16. Now, here's the deal. When you ride a trend, like I said before, it's not going to go straight up. It's going to go higher, high, high, low, high, high. And it can sometimes feel like a grind a little bit. But sometimes that's some of the most lethal type of trends where you just grind to the upside. And that's kind of what we've really seen. Now, I do want to kind of point something out when we look at the IXT. That sector, if we're going to kind of get a reversal, okay, if we extend that line, we have hit this line probably once, twice, three, four. Can we finally get a punch to the upside? So technology, again, kind of looks a little stronger, okay? It's not really an area that we've been super focused in, but overall, trying to get a little bounce here and hold that support level. Now, the transports, I don't like this index here, but we use it because we can't pull up a sector. Feel free to pull up the sector. The transports area still actually look pretty strong, okay? And also the last one we want to kind of make mention of is those financial stocks. Now, again, if financials are going to the upside like this, Goldman Sachs, Morgan Stanley, as you'll see in just a sec, they've actually had a pretty nice move, okay? Not necessarily a bearish indicator in terms of the economy. Now, let's actually just see if, just real quick, if there's any questions, okay? Now, so I think we set the table up. What I want to do is I just want to kind of look down at the Dow Jones for just a moment. Now, remember, we look at the same list daily, okay? Not skipping a day. Well, wonder if you're on vacation. When I went to Hawaii, I woke up at whatever it was, 5 o'clock in Hawaii time, and I looked at it every day. I'm not taking days off. I don't need to take days off, okay? Take days off for what? The bottom line is it doesn't take that long, okay? So when we look at, let's say, Dow Jones, we're just going to kind of look at this. And if I just kind of go through this. Now, by the way, one of the things, if you take a quick peek, okay, let me come off this. Cisco right there has a trend 2. What does that mean? Well, that means we were down, but the price is getting back above the short-term moving average. When we think trend 2, we're kind of visualizing in our mind, that's like diagonal resistance breakout. Now, if I click on that now, what does it look like? There's your diagonal breakout. Now, trend 2s don't tend to happen very much. Just because if people are going to buy them, they tend to buy them, or they fail and break back down to the downside. So seeing a 2 is kind of not as common. Now, if we click on the trend column, we could ask the question, well, are there other trend 2s that are really in this area? And the answer is yes. Cisco, Amazon, Chevron, Mickey D, and NVIDIA. Which stocks are in that trend 3? There she is right there, okay? And which stocks are in 4, and so on. So we could just kind of pick out the ones that we're trying to find, we're trying to say, I want to do a certain strategy or a setup, and that's combing through the list. Now, if I look through some others just real quick, which you guys and gals made mention of, Goldman Sachs, okay, got earnings coming up on 7/14, but overall kind of getting a little bounce. Somebody, maybe in Siberia, okay, right near the moving average, just randomly bounces out of nowhere, okay? Maybe it wasn't random. We're also seeing, for example, a little bounce or a continued grind to the upside on UNH. Now, here's the thing. This movement in the last, let's say, 3 months, 3.5 months, I mean, it's just been grinding, okay? You could almost say it's like making sausage, okay? It's just grinding. But that grind, okay, it doesn't seem very appealing, but the movement low to high on just United Healthcare has literally been 66%, just United Healthcare, okay? Now, if we also go down and take a look at one other stock that you made mention of in the chat, and let's go to an example after this, is Apple. Now, has anybody been watching Apple? Now, there's speculation online about Apple coming up with like a foldable phone. That foldable phone, if you look at it online, it looks very much like the Microsoft Surface Duo. It was an interesting concept, just didn't go anywhere for Microsoft, that is. Now, if you take a look at, let's say, Apple, for the last, let's say, 2 days ago, we saw it come down to the midsection of that green candle. About 10 days ago, we talked about that a lot. Second, you're actually going to see that yesterday went down quite a bit, but by the end of the day, long tail. Lisa, hello? And what you're now going to also notice is today sold off again, but then somebody bought on the tail and rammed it back up. Now, if we close here, we're not that far off that high of the low day. The most recent red candle, we only had one. So if we start to trade above 315.48 or close above 314.48, which is only 46 cents away from where we are now, it's actually less than that as I'm talking. But if we only go up 30 more cents, we would actually be getting a green dot, or should be getting a green dot on the chart. Now, so price action kind of is of interest here. Candlestick analysis. The other thing is, if we take a look at, let's say, volume. Does anybody take a look at the volume today? Now, volume can actually be on the stock itself, sure. But sometimes what people like to do is they like to look at the option table. They're looking at really the columns of volume for that contract. And also, if you could take a look at this, you got open interest. Now, I'm not going to go into this extensively, but kind of this is shorter term duration of time here. You really only have 8 days, and there's quite a bit of volume relative to the open interest. Okay, that's 50% of the open interest. That's about 2.5 times the open interest. This one right here, if you go to that one right there, about 40%. This is about 25%, 75%. So there's some activity really on the 8-day to expiration. Now, could someone be expecting a move? Okay, in the short term, could be, right? You go also look at the put side. Now, by the way, when you look at this, is it just on a certain strike or is it on a couple strikes? Is it just on the calls or the puts? Okay. Now, when you look at the calls or the puts, the volume, it could be buyers or sellers. Now, what we know for sure is there's always two sides. There's always someone that's going to say the opposite. Someone's entitled to be wrong. Why don't you tell us, okay? Why don't you tell us which direction you think the price is going to go? Now, as I'm getting an answer back on that, speak now, forever hold your peace. Couple of these other ones in the puts, 315s, that one's pretty high. This one's 50%. That one's about 60%. That one's about 50% of the open interest. It's not just on one of them. The one thing that kind of interestingly note, if you go down and look at, let's say, the August, the monthly expiration, you don't see it as high. So it's really these shorter term type of traders that are trying to put a position on. Okay, now, earlier this week, we actually talked about, let's say, buying shares of the stock and then buying a put too. Okay, now, I'm going to kind of show something a little different. Wonder if you said, James, I kind of have a very short-term view on this, maybe just 2-3 days to maybe 2-3 weeks, short term. Could the investor try to come in here and watch what I'm going to do? Remember I said, example given, that we need probably about 40 shares. Let me tell you why I said that in this example, then we're going to do this example, okay? So if I did, let's say, 40 shares of stock, okay? 40 shares of stock, 40 delta. Well, if I actually put this now on the analyze the trade, you're now going to see that that pulls up. It's just going to give us a diagonal line because it's literally showing us just the stock profit loss graph. But if we add that put, so now if I actually go down in this case and buy the put below the current stock price, well, what's the delta? Well, the delta currently is 40. Okay, now remember, if I click on this, it's going to be wrong because I need to go down to single order, first triggers SEQ, meaning do it in a sequence. Step 1, buy the share. Step 2, buy the put. Let me click on first triggers SEQ, then click on that 350. Now notice the bid ask there, 340, 350. I'm going to go ahead and actually move that right down to 345. Now let me put this on the diagram. Now if you look at this diagram now, what do you notice? Now, this diagram, this is not every day. This looks like a boomerang, okay? So first of all, where are we now? Well, we're right at 315-ish. And this is kind of an interesting chart because if we're right at 315, so here we are about right there, okay? Now, If the stock goes to the upside, there is still unlimited potential to the upside, unlimited max gain, okay? Because there's no cap. Now, second thing on this is, but if we get the direction wrong, if we did, well, we would be losing. So we'd be losing, losing, losing. And then what would happen is in that first dollar move, if we go down $1, we're down $40 on the stock. Is everyone with me? If we go down $1 and we have 40 shares, we're down $40. If the stock goes down $1, theoretically the option would be up about $40. Assuming time stays flat, volatility flat, we're just looking at direction. The first dollar move might be an offset. The stock is the bullish position, the put is the bearish position. But what's interesting about this is if we get the direction wrong, it goes down another dollar. Well, we're not going to be down $40. We'll be down, let's say, $80. But now, well, let me take that back. So all of a sudden, we're down $40 on the shares, but all of a sudden, the delta of the put is probably getting what? If the stock actually goes down, if the stock actually starts getting below that long put strike, what should be happening to the delta of the put? Let me rewrite that. We still have 40 shares. If the stock goes down, the delta of the put should be going up. And all of a sudden now, if the stock actually goes down, the delta of the put might be, let's say we gain 50. So all of a sudden is we might not have a loss. And that's what this really grid is showing. If I go down, let's say $3. Well, if I go down $3, I lose another $40 on the shares, another dollar down. But all of a sudden, if now that stock is below the strike even more, the delta of the put is increasing even more potentially. And all of a sudden, the put is offsetting potentially the stock loss, potentially. Need to see how quick it does it in the volatility. But overall, that's what that chart is showing. So if we get the direction wrong and that stock keeps going down, 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 this is showing that it turns back positive, this dollar amount on the right, on the left-hand side, because the delta of the put is getting bigger. The delta of the put actually gets bigger, protects actually more of the losses, could even actually turn positive. So in this case, we really want this to pop to the upside hard or go down to the downside hard. Okay? Don't sit sideways per se. Okay? All right. Now, if we actually go back and actually do this, so let's kind of show this. Okay? Now, in this case, if we do this, let's do this, right? Pull this back up. Let's bring it up to the paid money account so we can follow through on this. Let's go right to, let's go margin trade. Click on the Apple. Type that in. Just want to follow through on back on what we talked about. There it is. We have what type of trade here? That's a cash secured put. We'll get back to that after the case. And I click on this. I'm going to put the 40 shares so we can practice this, okay? Now, if you take a look at this, first triggers SEQ, click on that. Now, remember, the put is only good for 8 days. So we were looking at, let's say, the 312.50. Now, if I click on that now, there it is. And that price is going to probably push down to 345. Now, let's go back to that diagram, okay? Have you ever gotten into a position and said, man, I got in and I immediately drew down $500,000 within a day or two? That's kind of what's interesting about this diagram, okay? If it goes down from 315 and we drop down to 310, how bad's the position? We're going to be down, well, it's actually factoring into R. Let's take that off. Well, if we're sitting here, okay, if we go down about 314 to 310, we're probably not down that even that much. If we go down to, let's say, 305, we're starting to break even. We go down to 300, we're actually turning higher than where that was right now, okay? So I want you to practice buying 40 shares of a stock and then buying about a 30-year delta put. And I want you to track this, okay? And pull it up on the risk profile, okay? Now, confirm and send. Okay, confirm send. Now remember, the shares don't have commission. The commission is really in buying one contract, okay? Now, let me actually just see real quick. So Bill says, do we expect Apple to go down? No, we didn't say that, okay? We were looking at Apple in terms of the upward trend, Second, we talked about kind of the candlestick analysis that we saw. Remember, if you're seeing a position like this where the red candle only lasted a day and that was at resistance, and all of a sudden green candles show back up near resistance, we're not saying bearish. The thought is, could it potentially go higher? Now, the other thing is just real quick. Yep. Okay. Now, I'm going to also go back to just real quick. And now, the comment that I made is the question was from Richard, how DTE recommended. Okay. So, first off, in our example, we talked about buying the puts, maybe 20 to 50 days expiration, the monthly options. Does someone always have to do that? They don't always have to do that. They might say, look, I'm doing this over earnings. Maybe I'm doing this over where there's volume or speculation of an announcement, like the one we're talking about. But probably the majority of time, it's probably going to be 20 to 50 days to expiration. And then we talked about the math of that. Okay. How much might be too much. Okay. And what strike to pick and so on. All right. Now, what I'm now going to go ahead and do is let's kind of go back to this. So first off, I'm going to go back to a couple of examples that I just want to kind of pull up just real quick. Now, the other one, if I go back to Goldman Sachs, okay? Now, remember, Goldman Sachs in Morgan Stanley, you got GS for Goldman Sachs, MS for Morgan Stanley, they kind of look pretty similar. If you look at Goldman Sachs, you got the earnings coming up. What do we expect from the earnings? Well, someone's speculating right here. You're actually seeing that maybe the volatility might be higher. Let's double check that. Has that been building? We'll put that on and kind of see what has it been doing over the last couple of days. What do we got? Now, volatility has actually kind of stayed relatively flat. Here we are right around the 37% number. The volatility, I mean, we would say slightly building. That can't really say it's a slow trickle to the upside. So that we're not seeing that spike of volatility, okay? Now, if we go down to this and we kind of go look at the normal expiration we talk about, trying to give ourselves some time, if we go look at that 20 to 50 days expiration in the monthly options, we're looking at the August, and that has about a what? About 36, okay? Now, this is not completely unusual for Goldman Sachs, okay? If we actually pull this up and we go look at now, the ROR, the percentage, okay, the implied volatility percentage, 36. The other way we could actually kind of check the premium, the option premium relative to the current stock price, is looking at ROR. Remember, think of like dividend yield, right? Dividend yield is just the annual dividend divided by the current stock price. Dividend yield. Think of ROR like option yield. It's the option premium divided by it into the current stock price, okay? Now, if we take a look at this, I'm going to actually open up the strikes for just a moment. Now, if we had earnings coming up, the investor might say, I normally like to kind of maybe go closer to the strikes, current stock price, but maybe it's not liquid. Maybe it actually has the earnings coming up like we're talking about. When you look at the strikes, you're now going to notice that, geez, these are $4 wide. These are $2 wide. That's $2 wide. So the reason why I'm bringing this up is it's kind of interesting that some of these, they do not really actually have the open interest, okay? So just because they have options available doesn't mean necessarily they're liquid. Now, if we actually went to, now, by the way, this is why someone cannot say, oh, I recommend the monthly options. It's not that simple. Because sometimes you don't always have everyone, all the investors, focusing on 1 month. They might be focusing on a different duration of time. We're going to actually have to look. So if I went to, let's say, the weekly options and I said, okay, so do we have more liquidity here? No, really don't. Okay, these are still $2 wide. The open interest on these is in the hundreds, and the key word is barely. Okay, those are in the hundreds, barely. Now, we might ask the question, well, geez, if Goldman Sachs and Morgan Stanley are similar, could we maybe go look at Morgan Stanley and the chart looks very similar, pull up that trade and just double check, does it have something? Yeah, it's better there, a little bit higher. Go look at the monthly options. Let's go look at the August right there. Better. Okay. Now, do you see what I'm saying? Thank heavens there's other stocks, and thank heavens there's some correlation. So if we said, look, I want to kind of sell a put, okay, thinking the price could stay above a certain strike. Now let's go look and see just real quick. MS. When is its earnings? 7:15. So we're talking about next week. Now, the one thing we kind of need to understand is if we sell a put, the stock actually goes down. Okay, we could be assigned the shares of the stock. Noted. But the other thing is if we don't buy downside protection, the loss is potentially down to zero on the stock. Okay. Now, we could make this a typical vertical. The investor could say, look, what I'm going to do is sell the 210 and maybe buy the 200. Now, remember, if I did the 210, that is below the kind of starting point of delta 30 to 40. Why lower? Well, number one is we're trying to go to where there's more liquidity. There's more liquidity currently on the 210 and the 200. Not today, but as far as the cumulative or the number of contracts that are open and unexercised on that open interest. We're going to sell the 210 and then buy the 200. If we sell the 210, we buy, let's put that right in the paper money account so we can follow along. MS 210 200. Okay. Now you might be thinking, well, wait, why? We started with Goldman Sachs. We started to evaluate if it would be something maybe an investor might consider. Then we moved to Morgan Stanley. Similar trends, correlation. And now what you're going to see in this case is we said we're going to go to the one that actually has more liquidity on the options. That's if we wanted to do an option trade. I'm going to sell the 210, buy the 200. Okay? Andrew, hello. Now, just real quick, if we pull this back up, it's going to give us a 225 credit. That 225 credit, again, is going to be less than the max loss. Why? Well, because it's a more forgiving type of strategy. Current stock prices at 223, break even, that is literally in 43 days, that is going to be in this case at 207.75. So the stock could go down about $16 to break even. Now, this is a trade that's trying to be positive theta. You would probably assume that volatility might fall some, but this is probably not going to affect this type of strategy as much because you're selling an option and buying an option. So the commission, $1.30, because we're on both sides. We're going to go ahead and send the order. There it is. All right, now what I'm going to do in this case is I want to go back to something just really quick. Now there's a bad trade here, okay? The other day we showed an example of a short sale of a stock. Now most people, if you told them short sale, they're thinking you're talking about the house, okay? Well, we shorted the stock, okay? Short sale of the stock. And if you look at this, we did 25 shares of stock. Does everyone see that right there? I'll just point to it right there. So it says minus 25. Now we got to ask the question, is this a stock or an option? Well, on the first row, it's going to be option. No. On the first row, it's going to be stock if we had stock. If it said plus 25, we're bullish. If it said minus 25, we're bearish. Now remember, when we did this trade, we were at 376.10. We wanted the price to go down. Well, the price did go down. The dadgum stock went up. Now, it's actually opposite. We want to sell high, buy back low, but here we sold low, and if we buy back now, we've lost about $21 per share. If we lose $21 a share and we have 25 shares, the loss is $5.23. Now, I'm going to go back to the chart for just a second, bring back up ADI. Where is the stop loss? Is there a stop loss? And the answer is yes. There is a stop loss, and we came really close. Now, wait, I'm used to a stop that's red. That's true, because you're long. You own the shares of stock. Here, the stop and the limit. The stop is buy the shares back if it goes to that price or higher, get us out. And buy it if we go to that price or lower, should be for a gain at that price. So here we actually almost got a reversal. Now, I'm going to ask you a question. I know what we're going to do, but just tell me what you would do. If you looked at this stock, and this is kind of one of the things we've talked about, is have you ever seen something where it broke support and then all of a sudden it reversed back up above support, maybe just in a couple days? So number one is if this stock goes up anymore, it's going to get stopped out. Should. Now, it's not saying it's going to get us out right at 400. If tomorrow morning it opens up at 403, could fill at a higher price. Opens up at 410, could fill at a higher price. The stop, whether we talk about a buy stop, sell stop, is a market order. It's a trigger to get out on a buy stop, okay? Or a buy stop or a sell stop, okay? Buy stop, sell stop, we don't know what the price, it's a trigger, okay? Now, what I'm going to actually do in this case is, now, comment from Chris actually says close. Here's the deal. We don't really have that much more potential risk. Now, I say that's a dangerous comment because I just said to you, a stop doesn't guarantee an exit. It's a trigger to sell, trigger to buy those shares back, but we don't know where it's going to buy back. So we're going to leave that right there. But one thing we're going to do, we're going to go back to ADI. Okay. Now, ADI, if we pull this back up, I just kind of want to look and see what about the options and all. These are still pretty wide. Okay, $2 wide. The volatility is 58. I want to go look at the shorter term options. These are still pretty wide. Okay, now if we take a look at this, probably the closest bid-ask, well, the tightest bid-ask spread that we're seeing. And let me kind of just go down to this just real quick. The one that's probably the tighter one, that one, 387, 385. Okay, there. Someone might say, James, this kind of looks like your break of support, snapback rally. Now, wait a second. Has anyone ever gone bearish and then the stock, you got out as it went up, then you went bullish and that didn't work either? Yes. Okay. So sometimes you can actually have where it kind of whips around an area of support or resistance. Now, when we look at ADI, I just want to kind of pull this up just real quick to see, is there any liquidity on that is a little bit tighter? I don't see it, okay? Now, the one that's very similar to ADI, I believe, is AMD, okay? The AMD, well, stronger trend. And the reason why I say stronger trend, ADI was more horizontal support. AMD does not have horizontal support, really. It really has higher lows. So what we're kind of thinking in this case is maybe could we pick if the semis maybe bounce back up, could maybe, let's say that there's a potential loss on the ADI trade, but could we try to benefit from one of the other semiconductor stocks? Now, if someone says, I don't want to do that, and I'm kind of thinking about ADI, this is where the investor sure hopes that they might have two different brokerage accounts. One account is short. The other account is long, okay? And it doesn't have to be the same quantity either, okay? If the investor said, look, I'm not going to do that. I really actually want to go to something that actually has a little bit more of an upward trend. I'm going to go back to AMD for just a second. Let's double check that. We don't have to necessarily do options. I just want to kind of look and see what it has. A little bit better. Still not super tight. I'm looking at this one right here. Probably, if we kind of said, let's kind of show this example. If we went down to about a 30-ish delta, which is on the low end of the range we talk about, if we sold the 490 and then bought the 480, okay, we did that like a vertical, okay? If we kind of speculated and said, what's the chances of us getting stomped out in that paper money example on ADI? Probably pretty high. If all of a sudden the semis do go back to the upside, we're going to try to have one semiconductor trade where it might try to benefit from that movement, okay? So we might lock in a loss, and if this actually goes up, it might offset some, assuming it goes up. This is if we go all the way to expiration and the stock closes above both strikes. We might not get all of it, okay? And we can even have that potential loss of $653. Now, that kind of stinks a little bit because you're thinking, well, geez, how many bearish positions are in the portfolio? The answer is one position, One. So that bearish position, that one is, let's say it's a loss. The other positions in the portfolio, they're all bullish. So if the market goes back to the upside, the semis go back to the upside, you're thinking that the overall portfolio might offset those losses. Here's the thing. We have to stop thinking about this one trade. If you were a CEO of a company of 50 people, 100, 150, 200 people, and one person quits, well, I mean, thanks for your work and have a nice day. Okay. So the biggest actually thing is if you're letting one position dictate the whole portfolio, it's probably too big of a position. Okay. So we're treating this, don't think of it as ADI or whatever. Just think of this as trade number 6. Okay. Some gain, some lose. We just want the net. Okay. Now, if we did this, if I go to send the order, note the commission, send, I'm going to try to play a little potential offset there. Now, other questions. Now, I'm going to fast fire through these questions, okay? WDC, comment came in from, Lisa Jack. If we take a look at, by the way, let's pull this up just real quick and kind of just show what we're looking at here. Now, by the way, if you normally look at the technology sector, you should look and see what's in the sector. A monstrous, I think it was 47% of the technology sector is now underneath the semiconductor stocks because of the movements they've had. Now, if we looked at, let's say, the NASDAQ 100 and said, well, what do we have here? You're now going to notice if we fast fire through NXPI, okay, a little reversal, trying to, Old Dominion Freight, transports, which we talked about, and you look at, let's say, Broadcom, pretty good push. And if you look at Texas Instruments, okay, trying to right-size itself after maybe kind of pulling back, PanW, Palo Alto Networks, Fortinet, cybersecurity, Cisco, okay, already mentioned that one. There's the ADI. The one we also don't want to forget just real quick is also getting into the area of Starbucks. Starbucks has been one that's kind of been firming up and really making that $100 the floor, okay? Now, the other one that someone's saying, hey, you need to look at is Dell. Well, I posted about Dell, 3 days ago? And we kind of talked about it being, so on my X page, I made a little video on, was about 2.5-minute video on the support that it was getting. Now, let's spend a little time with this. Who said this? Trader Joe, okay? Now, by the way, I agree with actually Lisa that some of the semis tried to firm up a little bit, okay? Now, you got to remember is they went up a lot. And when they go up a lot, they can pull back a lot. And on a percentage basis, they did. But when you look at the whole of it, that trend, many of those semis are still in the uptrend, okay? Now, if we looked at a stock like Dell, the reason why we kind of brought this up is Dell actually has like a diagonal line of resistance with a diagonal line of support, okay? Now, what you kind of need to understand here is the capital that we're going to invest, okay, is just the position. The risk that we're going to take is we're risking something for the potential return. So you need to understand that without capital to risk, I mean, think about this, okay? If you had zero money and you saw these trends going to the upside, you don't have any money, you can't risk any money. It doesn't matter how high the stock market goes. Don't have anything to risk, don't have any money. So the investor's risking some money, investing some capital, to see if they can't get a return that actually could grow their money. So that risk is really like some might call the down amount of capital, if you will, okay, to see if it's going to work. They don't know. Time will tell. Now, the big actually thing is when we take a look at this is, now let's imagine the investor, I'm going to show both. If the investor says, look, I want to buy those shares of stock, let's kind of fast fire these numbers, okay? Now, remember when we talk about this, okay, running those, just some basic numbers, stock price, $454.93. support level. Now remember, if we take the highest amount, and this is where people are not comfortable, okay? It would be a good idea to get comfortable with the risk that you're willing to take and say, is that really realistic or is it probably too tight? And are you okay with losing that amount? Now, if we take a look at this 423.84, that's the tightest stop loss. Okay. So if we got in 454-ish, got to stop at 415-ish, that's actually going to give us a risk in dollar amount, 39.57. If we look at that, it's going to be 8%. It's bigger than you would think. Okay. Let's double check that number. Yeah, that's what it is. It's because today's gap. Okay. Now, that percentage is 8%. Now, what might someone do with that information? They might say, hey, number one is I might try to get in some of the position, but they might say, James, if we kind of pull back a little bit, maybe to the middle of the candle, they might try to add a little bit to try to get in a little bit closer to support. Now, I don't have that time to do that right now, so we're going to take a full position. But noted, that's a little higher. In our examples, probably 6 to 8% is high. 10% is lights are glaring. Okay, this is 8%. But if we had some time, we'd probably say, look, I'm going to take a half position, second, try to do the limit right in the midsection. Now, let's actually do this. Right click on the chart. Let's actually make sure, put that in. Dell, okay? If we right click on the chart, buy custom, and I'm going to go with OCO bracket. Now, I need your help here. Where would you put the target? 415.36, okay? 415.36, data GTC, data GTC. Now, what I'm going to do is going to go back to the capital size. In our examples, we said there is no way we're doing more than 10% of the portfolio. 10% of this portfolio, $5,600. $5,600 on this amount of dollar stock, or the price of the stock, 455, it's going to give us 12 shares. Now, if I went back to this and said, this really looks like the flag. Now, if you said, James, I actually didn't get that X video from Monday, go back on my X account. You'll actually see it. I posted on Monday afternoon or Tuesday morning. Now, if you look at this kind of the flag, you're going to kind of notice that we kind of see this movement from there to there. This is where that move started. We had that consolidation right around the first 1 or 2 fib levels. If we said the 161 extension, it's the 612. If you said, look, that is just, there's no way, okay? I'm even going to take a lower amount. Some people might like to say, what's halfway down to what's halfway from the 100 to the 261? Well, let's put about a 130 line. Now, remember, these are what they call slope coefficients here, okay? It's all math, okay? And if we did 130, click that. The 130 is going to give us 576. 576.90, there it is. So in wrapping up here, did a stock trade on Dell. Now, by the way, does it have to be a stock trade? It doesn't have to be, okay? You might say, well, James, I was kind of thinking about maybe using an option as well, but I'm doing a stock trade on this. Again, you have to go check the liquidity to see, is it something you could consider? What is that spread, okay? But Dell, it's not just on the daily chart. It's actually showing on that weekly chart as well. When you look at the weekly chart, if we close here, this would be the close above the high of the low week if we close here. Now, we got, for example, coming up right at the top of the hour, so just want to give us a quick reminder that if you said, James, is this like a one-off session or we meet each week? We meet each week. Don't miss it, okay? Now, here's the deal. If you take a look at this, our channel is right on YouTube. Our channel, if you went to youtube.com and you typed in Trader Talk Schwab Coaching Webcast, you'll see this page. You can subscribe for free to see our past content, and we broadcast via YouTube. You don't have to be on your computer. You can be on your phone or iPad, whatever. Now, also remember that for this class, we do have a playlist for this class right there, okay? And also, quick reminder that coming up next, we're going to be having a class on short verticals with Brett Crowther, okay? Now, remember with what we discussed here today, it was done for example, illustrative purposes only. We're going to continue to watch that bounce back in the semis. I'll be back on tomorrow morning with Kevin on ETFs. Join us live at 9:30 a.m. Eastern. Remember, with what we discussed, it was done for example, illustrated purposes only. Thank you so much for your comments, your participation, and thanks to Connie as well. And remember that all investing involves risk, and without risk, couldn't have reward. Okay? So we need some risk, some capital that's going to be invested and risk to see if that trend could work. Go out and practice these strategies we talked about. See if it's a strategy that you or strategies that you would consider. I'll see you back tomorrow morning at 9:30 a.m. Eastern. Thanks so much. Take care. Bye-bye.